And we are live here, Tackle Trading's halftime report. It's our daily live market analysis show where we break down the markets, we do our daily routine, and we talk about what's in the news and in the charts as well. How you doing today, brother?
Tim, doing really good. I'm excited to be here with the crew and the hashtag halftime crew and hashtag team tackle for the halftime report today. And I just want to, start each day with really kind of just going through the tackle today email, Tim. It kind of lists out everything that we're doing that day and to get prepared for the week. And I just love Christian's writing so much. And if you guys aren't familiar with the tackle today email, and you can go over there and get it over there at Tackle Trading, obviously, but there's always a little bit of a write-up, and then there's a chart of the day from usually one of our scouting reports, and then a nice little video of the day, and then you have today's lineup where we release the Tales of the Technician, Art of Swing Trading. You'll see why we wrote up on swing trading here today and this week. Obviously, the Traders Lounge. We got the Coaches Show later on tonight, and then the market recap with Frank later on today as well, Tim. So definitely go out there and check out that Tackle Today email. We try to make it very, very short for everybody. We know everybody's time is one of the most important commodities these days, no doubt about that. And finally, Tim, before we get into the report and look at all the different instruments that we usually analyze, we are having a special swing trading Mind of the Trader webinar series tomorrow night, February 27th at 8:30 p.m. And you can get there by registering for the event right here in the Tackle Today email. And yes, I will be the one teaching you the art of swing trading, and specifically, Tim, swing trading and using those Tackle Trading scouting reports, teaching people how to understand why we put entries where we do, why we put stop losses where we do, and why we also put targets where we do as well. So definitely join me tomorrow night. We're going to have a lot of fun.
Very good. And I'll tell you, there's a lot in the news today. Probably the first thing we got to talk about is Fed Powell chairman is actually in Washington, and he's talking in front of Congress here today, Matt. Quite a few headlines. Number one, they don't necessarily see the economic indicators the same. Some are strong, some are weak. He was talking about mixed information. The market's not really doing much on the testimony here. What's your reaction to his testimony so far?
Well, I have not gotten all the takes from the testimony, and it's still going on right now. So I'm going to wait to kind of hear everything that he says. Like I said, Tim, I haven't had a chance to watch that today. Usually I do, but I just got a little busy today. So I don't know everything Powell has said so far, but I think the most likely scenario is that he reiterates a lot of what he's been talking about in the last 4 to 6 weeks after the one-day bear market we had in December there. So I anticipate that he's going to just reiterate a lot of what he said. I did hear one thing that was concerning to me, and it's been concerning to me for a while now, about his inflationary targets being 2%. He was responding to a Republican senator, and I can't remember what senator it was, but he said, our goal is to average 2% inflation year after year, and not just average it in good times, because we see a deflationary period in bad times. Mm-hmm. And I just don't buy that argument. I just don't buy his argument that we average 2% inflation in good times and we have a deflationary period in bad times. And the reason I don't buy the argument is it doesn't make any monetary sense. We have increased the monetary supply in America since 2000 by close to 350, 400%. We've went from a $3.5 trillion money supply to around a $14 trillion money supply, Tim. And when you increase the money supply in such a capacity like that, you don't average 2%. You can't have a 400% increase in monetary supply and only average 36% total inflation. So I just don't buy that argument. And it's another point that makes me believe that the Fed is not for the people, that the Fed is for Wall Street and for government. And it's just, we can't trust them.
Yeah. What's interesting about the Fed and Jerome Powell is his waffling over the last 6 months has been historic, and it's driven market volatility. Now they tend to believe him. Usually when the Fed chair goes to Washington and gives testimony, I would have expected more volatility, Matt. The S&P is literally on a tiny doji, nothing going on.
Well, think about it. Market's up close to 20% in 8 weeks, right? I mean, you're talking about a historic run. What's Powell going to say to drive it another 5%? I mean, it's already priced in a lot of this, and that's kind of the concern here, is that the Fed went dovish, and Powell did his Allen Iverson crossover from hawkish to dovish. The market responded back up 20%. but you do need new catalysts, Tim. We can't recycle the exact same headline from Fed Powell going dovish to positive news coming out of the Chinese trade war, and just recycle that exact same news headline over and over and over again. So, Powell's going to say the exact same thing he said for the last 4 to 6 weeks. He's going to reiterate it. I don't think he's going to get a lot of pressure from the government in the Q&A period. He was sent the questions ahead of time, so he knows exactly what to expect. So I just expect him to reiterate what he's been saying.
Quite a few stocks on the S&P 500 that are flashing for me here today. Number one is probably Home Depot, also a Dow component. Home Depot had earnings and missed a little bit. They actually beat their EPS number, but they came in with weaker than expected sales and
I actually had them
slowing growth
missing on EPS, bro.
Did they miss EPS?
Yeah, they came in at 2.09 versus an expectation of 2.16. Revenue came in at 26.6 billion. The miss on earnings per share was not a big miss. It was just a slight miss. The concern was, I mean, you guys probably know what I'm going to say. Okay, what am I going to say the concern is? What's the concern, Tim?
Slowing global growth and
guidance,
sales expectations and all those kind of things.
Guidance. Another company lowered guidance.
Mm-hmm. Yeah, and a big one too. Obviously, brick and mortar retail. Retail's not been doing well for most of this quarter. It's one of the industries that actually kind of underperformed. There have been notable beats, like Walmart had a good, quarter, but then Gap fell back. Home Depot here, the gap down is pretty insignificant if you look at a percentage basis, Matt. This actually probably just moving into more of a neutral condition and not really a bearish runaway gap or anything like that.
No. I if you were bullish, I'd downgrade to neutrality here. The guidance miss wasn't a massive miss, Tim. I mean, the guidance went from 1021 down to earnings per shares of 1003. So we're just talking about a slight miss on guidance. I do think it's a little bit of an overreaction to the report. It was down earlier today about 3%. Now it's only down about 2%. So I took it as a slight overreaction. The miss wasn't historic by no means. Apple's miss and Amazon's miss were far worse than Home Depot's. So I don't want to take too much into that. The other stock in the Dow, Tim, we need to talk about is Caterpillar.
Yeah, double downgrade by UBS.
Yeah, double downgrade today. And little surprising. I mean, usually stocks get downgraded after this type of scenario right here, or this type of scenario right here after the earnings. So I understand the downgrade because they did miss 15% on earnings per share coming in on, I believe it was January 28th. But I think this is a overreaction as well, because think about it. I mean, we're positive on the Dow right now. We're positive on the trade wars right now. Caterpillar has been, beat up, a lot of it because of those trade wars. And I certainly understand the miss on earnings, but I don't agree with the downgrade here. I think it's a little too early.
Well, and frankly, a lot of times downgrades like this, Matt, they end up creating opportunities. Short-term price action will bring it back down, but another breakout up at 145 would be tradable again to the upside. How many times have we seen a company come out and downgrade? Their investors or the people who follow them, they respond to it. They might sell. They might create a short-term blip in the radar, but this is just price action. It's normal.
It obviously got downgraded, but you know what? We like to rip on the advisors who downgrade after a 60% clip. So, I'd like to dig into this a little bit, but short-term bullish uptrend. I'm not taking this as I'm still bullish. I'm still slightly bullish on Caterpillar.
Yeah. Quite a few things in the news here as well. One thing I saw, Matt, consumer confidence came in at a record in the last 4 months or so. It was actually very, very strong. We've been trending in the wrong directions, but apparently consumers are looking at the economy right now and feeling very good about it. As we go back to the S&P and kind of, or even right here on the economic calendar, they want to spend money, Matt. I mean, is that a good indicator?
Listen, the Fed is telling us this economy is in shambles and just going to die upon its sword, and yet consumers like, well, hold my beer and watch this.
Yeah.
I mean, consumers are very ecstatic right now, but consumers are always ecstatic until the markets actually tank.
Correct. I mean, it's not exactly a leading indicator, usually a lagging indicator, the way consumers, the way that purchasers, those kind of surveys. They're not looking at
Well, think about it.
economic indicators.
Think about it. No, they're not looking at the unemployment report. They're not looking at GDP. They're not looking at EPS.
Mm-hmm.
Usually consumers, and I'm talking the active investor type consumers, are taught to look at their portfolios once or twice a year.
Mm-hmm.
Look at it on New Year's and look at it on July 4th, right?
Mm-hmm.
So I mean, it's an historically lagging indicator, but they are very, very confident right now. There's no doubt.
Some of the top gainers on the S&P here today: AutoZone, JM Schmucker, a jam company, Mattel, Advanced Auto Parts, and Campbell's Soup. If you look at AZO, the auto parts actually flashed for me on my heat map today, and I saw them. They kind of stood out. Earnings beat, gapped out. Now it's backfilling, Matt. Not great price
Feels
action
exhaustion.
response. Yeah.
Feels like an exhaustion gap there, and we've talked about this type of gap in the past. In understanding the gap, there's so many similarities to gapping stocks. When you have a trending condition like AutoZone was in, nice little short-term bullish uptrend, this type of gap can either be considered a runaway gap or an exhaustion gap. And it's not the technical condition coming into the gap, it's the reaction after the gap. And if you and typically speaking, if you do have that runaway gap, it'll open up where it did at 960, and then it will start running away from the price. When you have the gap start coming in, locking in profit, that's typically a sign of an exhaustion gap that the gap will fill. So there's no trade here is the point, because of what the market's response to the gap was.
Mm-hmm. Yeah, as I look at that chart, obviously not tradable. Is it potentially tradable if you fill the whole thing back in doji a la Walmart? We are hitting an all-time or a new
Walmart
high.
or Facebook or something like that lines. Yes, it is tradable, but you got to. I mean, think about it in comparison to Facebook here. Okay, Facebook gapped out, came back down, set that retracement, and it took a good full 2.5 weeks for that to kind of find that retracement. So yes, could AutoZone be tradable? Absolutely, but I would wait for that technical setup to really set up first. I would not limit buy at 920 is my point. Let it set up.
Yeah. Let's move on to the Dow Jones as we work through our daily routine here. The Dow, the advanced decline line 17 to 13, 17 gainers, 13 losers, as it's kind of a mixed market. Obviously a doji here today, not a lot going on up here at resistance at the high point. Matt, as you read the Dow here, what's going to propel it to break out? We're in
Gotta have new catalyst.
Yeah.
I mean, I think about it today, Tim. Chairman Powell today is giving a speech where he's going to be dovish, right? He's going to reiterate what he's been saying. You have Theresa May looking at extending the deadline for Brexit, which says they will not have a hard Brexit. They're looking at a negotiated Brexit deal, and there's still some hope that they remain in the EU. You have positive news coming out of China and trade wars. And you have an economic report called the Consumer Confidence Report, which was really, really, really good today. And the market did nothing. Tim, the market's been up 20%. Let's let the greedy traders and whatnot just lock in some profit in that 20%. I think we need new catalyst here. It's not just us that is getting sick of recycled headlines trying to propel and prop the market up and up and up. We need new catalyst here. And so, and that's not happening today.
A day where Home Depot gaps down on earnings and you have a miss there, you would have expected the Dow and Caterpillar as well to be more down. But really resiliency here, Matt. Maybe Cisco running is looking pretty good. Boeing is holding up here on a doji. Those two companies are huge components, and it didn't bring that down. It's really interesting price action to me. I'm with you. There's no catalyst to propel it. It's not breaking out, but I'm seeing some strength in certain companies here.
Well, Cisco for one, I mean, Boeing for another. I mean, we're talking you got it. You got a little bit of a mixed market here,
Yeah.
And we've talked about that. Whenever you hear us talk about a stock picker's market, there's going to be some divergence within the industries. There's going to be some divergence within the sectors. So I love Cisco here. I love Boeing here, and let those trades come to fruition. You just got some going up and some going down today, and it's a mixed bag.
Nike's got a beautiful chart, by the way, and one that I've been watching. It's on my watch list, on the option report watch list. Break up here at 85.04. Here's that 86.04, Matt. 86.04. That would be clearing into the new highs. Obviously, the Dow would need to be breaking out as well, but there are individual components and individual companies that are still looking pretty good.
Oh, a breakout of an all-time high on a weekly chart, that's definitely tradable for
Yeah.
every type of trader, from your swing traders to your position traders to investors. I mean, you name it. It's a good breakout. Where's Coach Frank? We love breakouts.
Breakout, Frank.
Breakout Frank.
Move on to the NASDAQ if you would. And do you got your soapbox ready?
No, I don't have it.
You're gonna get it out.
Am I going to need it? Am I going to need it?
Tesla's Elon Musk was probed by the SEC about his tweet about production of his cars. Did you see this news?
I did. SEC has asked a federal judge to hold Elon Musk in contempt for his Twitter. And
did you also see how fast he walked that one back?
Yeah, he tried to put the toothpaste back. He tried to lie about that one too. He's like, "Oh no, this is what I really meant. I didn't really mean that I had buyers at 420. I didn't really mean that. I mean, come, Elon, how many times do I got to say it? I don't need to get on soapbox. Elon's hanging himself. I mean, he is getting to the point where his behavior is so ridiculous, volatile, inconsistent, that I don't understand why anybody, and I mean anybody, still believes in this man. I don't get it. I just don't.
I think the SEC is right, by the way. You can't come out and tell us that you're putting out 500,000 cars this year when that's what you expect to be on a projected pace for by the end of the year. I mean, literally the math, what Elon said was a lie, Matt.
Okay, so how many times does Elon have to lie before somebody actually does something with it?
He has a gag order. You can't go out and lie about your company's fundamentals.
Okay, but how many times? That's fine. That's like me telling my son, that's really bad behavior, and then letting him do it over and over and over and over and over for the next 6 months and have no punishment in any capacity. You basically allowed him to do this. So let's not
wait. They fined him, right, Matt?
Oh God. That's like finding the NFL player $8,000 when he has a $30 million salary. I mean, yeah. So I'm done with my soapbox because Elon just
stock is being resilient.
Well, that's because fanboys. But I'm out on stock manipulators. That's number one. Okay. Mm-hmm. Number two, at what point is people going to realize that this is a house of cards with Tesla? There's a reason so many people are shorting the company, because they don't believe in the fundamentals of it, because Elon puts out these lies. 500, they're not doing 500,000 cars. Oh my God.
No, we know that they're not.
They're not doing that.
He had to actually come out and say, no, that's not what I meant. I didn't mean to say it that way. Elon, you have 20 million followers on Twitter. When you say something, it can impact price action, and that is price manipulation. I mean, come on. Absolutely, 100%.
Listen, when Carl Icahn was doing it in 2017, I was ripping Carl Icahn, and when Jamie Dimon was doing it to Bitcoin, I was ripping Jamie Dimon, and when he did it to gold, I ripped him on gold. You got to be consistent, and if Elon wants to go join the stock manipulators out there, that's fine, but I'm out.
A couple of companies grabbing my eye on the NASDAQ here today, Matt. American Airlines up 2%.
Can I just say one last thing
on Tesla?
Yeah. I look forward to the day when Tesla breaks 250. I will smile. I will pop open a nice bottle of wine, and I will sip some wine as I enter in that short position under 250.
Haters gonna hate on that one, Matt.
What if it breaks? I'm not gonna hate. I'm gonna
buy the breakout.
What?
If it broke 380, would you buy the breakout?
There's zero scenario possible where I own Tesla shares.
Too funny.
I have principles, my friend.
I know. A couple of companies grabbing my eye on the bull side of the NASDAQ here. JD.com. We talked about FXI, long Chinese stocks recently. Can you buy this one? Do you have?
We don't support CEO rapists.
No, we don't. No. But I did say EA is actually showing me a nice little pivot here, and we're going to set up a delta trade on it.
I'm getting excited on this one. I'm getting excited on this one. I also think it has a pretty clear trigger, but we'll come back to EA here in a minute.
Yeah, Baidu is showing me weakness on that FXI, and those Chinese indexes still down even post earnings, Matt. For some reason, this company's not participated in that rally from a lot of the Chinese stocks.
No, it has not, and that's got to be obvious concern for anybody that invest in Baidu. You got to look at potential shorts. Now, I wouldn't short until after it breaks 153. Mm-hmm. But weakness here. Just obvious weakness here.
Move on to the RTY. All the indexes are flat. I mean, literally the Dow 1515 on the advanced decline, the S&P 230 270, the NASDAQ 5050 on the advanced decline. The RTY, as we look at this chart here, also hesitating at the 1600 mark and the 200 MA. Does the 200 MA play anything for you here, Matt? The rut has not always responded to it.
No.
Yeah.
I personally, and it's technically usually a fairly good barometer at that 200-day moving average, but this market has not cared about 200-day moving averages that much, Tim.
Mm-hmm.
Not recently. It will in the future, and it certainly has in the past. But I think it's just overextended, Tim, and a little bit of profit taking is to be understood. I would love a retracement in the market. Oh my God, I would celebrate it.
Yeah.
Give me all these overvalued stocks, another opportunity to pop some calls on. Heavens, yes.
Stock pickers market right now, guys. We're flat at resistance on all the indexes. Find your bulls, find your bears. They are out there. There's no doubt about it. But the broad indexes are kind of hesitating up here at the high without a catalyst. Let's move on to the dollar and the currency markets for just a moment here. You'd think Fed testimony, we're going to get volatility out of the dollar. It is selling just a hair here, Matt. You're breaking down below that pivot. Are you moving into a more neutral condition?
I am.
Yeah,
I am. The 96 level right here, 96.30 level right there was an important support level for me. I never did get any degree of confirmation on a swing trade here. Once you broke that level right there, Tim, on the intraday, you got to adjust your bias a little bit. And now we're back down into that neutrality. As you can see, you came back down underneath this pivot. And once you came back down underneath that pivot, you're back into neutrality right now. And a neutral dollar makes trading currency difficult.
Mm-hmm. Yeah. The cross pairs don't exactly flash what you're looking for. Now, dollar back, let's check the commodity markets, move on to crude oil first. We talked about this extensively on the podcast. For me, the short-term trend is still intact, but it's got some weak signals as well. There's mixed information here on crude light. I wouldn't call this bearish just because you had the red candle yesterday. It still has a higher high, higher low, higher high, higher low. What's your read on crude oil?
Well, for those of you who've listened to the podcast, Mark and I, we talked quite a bit about the fundamentals of crude oil. And I think none of us saw it as a good investment right now, and not even a good position trade right now, because we don't believe in the underlying fundamentals right now with the U.S. pumping out as much as they can in a slowing global growth environment. So the fundamentals behind crude are not really there. But as a trader who is focused more on short-term analysis, short-term trends, short-term patterns, those fundamental concerns that we have don't really play a role. So as a short-term trader, no, one day does not make a bear market. But in terms of this, I kind of like crude right here. You're coming back down into the breakout channel of 55. You're slowing your momentum in a rising moving average environment. I think you got a very easy trigger on some type of directional play above 56 here. So no, I don't like it long term, but short term, I kind of like the setup.
Mm-hmm. Yeah, I agree with that. And there's going to be volatility in that market. Obviously, the EIA numbers come out every Wednesday. If you're a crude trader, always aware of that event. And we'll be talking more about that one tomorrow.
But has it been a volatile environment for crude in the last month?
Well, that 3% day yesterday was the worst of the year so far. So no, it hasn't been high volatility compared to like last quarter.
I mean, again, look at the ATR. Has it really been a volatile trading environment for crude?
Yeah, I mean, it's always a little bit higher volatility in beta than, say, stocks, right?
I get that, but in the last 6 weeks, it's trading at about 50% less than it was in December.
Yeah, but it was crazy.
Of course, it was crazy, and yes, trading $1.7 a day on a $55 instrument means you're trading at about 2.5% a day. Mm-hmm. So it's whenever you trade crude, it's a volatile tradable instrument. I'm just saying volatility has came out of crude in the last 6 weeks.
Sure. Yeah, I agree with that. Let's take a look at gold and some of the metals markets. We had an extensive conversation yesterday with Peter Hugg from Kitco on our podcast about the gold markets. Enjoyed that thoroughly, Matt. Gold now kind of sitting on a doji here, still in an uptrend. Dollar down. I would have thought maybe gold goes up a little bit, but are they somewhat decoupling in their own way? And
a little bit. A little bit. I mean, look at the current trend on gold since we really did bottom here on 1116 all the way through today. Gold's had a wonderful, wonderful run, and I still think this is going to continue. I don't think this trend is over yet. So in terms of this, gold has been trending fairly aggressively to the bullish side. When you look at the dollar here in that exact same time frame, 11 somewhere mid-November, the dollar has been flat. Gold has been trending bullish. So it's not like the dollar was bearish while gold was going up. And we've made this argument before that the dollar is the best of a bad bunch of currencies right now. And what we mean by that is when you have a dovish economic environment with monetary policy from around the world, not just in the U.S., you have the euro, printing more money. The Europeans are still doing quantitative easing, Tim. The Japanese are still doing quantitative easing. They were supposed to start raising interest rates starting in the third or fourth quarter of this year with the Europeans. They're obviously not going to do that now, especially with the news that came out of Germany last week. So in terms of that, you have everybody trying to race their currency to the bottom is what's happening. And that's why we say the dollar is the best of a bad bunch, because just ask yourself a question. Would you rather own dollars or euros? Regardless of what's going on monetarily.
Yeah, I would rather own the dollar.
Dollars or yen?
The dollar.
Dollar or the pound?
The dollar.
Okay, so the dollar against the other three major currencies out there, it goes dollar, euro, yen, pound. The dollar against those other three major currencies, obviously we would rather own the dollar, despite the fact that the Fed is done raising interest rates. That's what's kind of created that neutral environment over the last 2.5 months, whereas gold has been going up. So yes, are they decoupling a little bit? Absolutely. And the same with crude. Crude's been decoupled over the last 10 years. We're starting to see that decoupled a little bit with gold. And it's just simply because of what the Fed has done over the last 10 years in creating this ridiculously dovish environment from around the world. I mean, Tim, we went through a 10-year time period where we had like 750 interest rate decreases around the world. And so you create this monetary environment where, you thought gold should perform so much better than it did. And now we're starting to see that come to fruition.
There's so many different ways in the metals market you can get exposure. Gold is one of them. The GLD ETF is a very popular one, Matt, but I got to say, I am just thoroughly impressed the last 4 months. I know you are as well on PAL, P-A-L-L. The palladium market is a juggernaut. It's up another 2% here today. It's been running hot. It's been crazy. It's a runaway train. There's no doubt about it. What's your read on it technically?
Technically, it's overextended, and if you haven't made any trades, I mean, this was the trade. We had it right there on the scouting report right there, Tim. That was the trade. You can't chase that dragon now as it's approaching 150. Okay, palladium is overextended in the short term. I would wait for it to either high base or form a bullish retracement to give you another buying opportunity. But this, and it's not hard, Tim. Look at your buying signals. Look how important the 20-day moving average is to this tradable instrument. This is not a hard trigger. This is not a hard analysis here. This is a patient analysis. Be patient. Let that 20-day moving average catch up. Let the ETF in palladium, let it come back down into the actual 20-day moving average. So it's been on fire. It's been in my estimation, it's been the most bullish of the metals out there, and it's not in. I don't even think it's close.
Yeah, no, it's been a runner. Bring up a /HG if you would. I flat out asked Peter on the podcast yesterday, what's your read on copper? And he's like, I'd be bullish on copper, and I know we're overextended in a range here, but there are some really interesting companies like Freeport-McMoRan Copper and Gold and some other different ETFs that you could get exposure to. Yeah. I like the copper markets here as well, Matt.
Peter was talking long term. Yeah. I mean, even he said, there's three types of people that invest in gold. You have the or he was talking about gold, but I mean, you can analyze this with any futures and commodity. You have your gold bugs who will want to own the precious metal. You have the conservative people who want to own a certain percentage of their portfolio in the precious metal, and they could get access to the ETF market or whatnot. And then you have your traders, and your traders, they'll buy at 9 o'clock and sell at 9:10. Right. I mean, that's just traders' philosophy. So Peter, I think we're all in agreements on copper right now. And Tim, here to me was really the trade here was that, and I fought for this so hard on the scouting report. I'm never going to let you guys get that down. Never. It will be pulled up forever. But you're now overextended. It's slowing its momentum here. Wait for it to come back down. But I love copper here in the short term. And quite frankly, copper, Tim, you made a good point on the pod. Copper, China being one of the number one producers of utilization of copper, and that trade war or the ending of that trade war should actually help copper out.
I read a statistic a couple of years ago in the National Geographic, and it's of concrete, not copper, but it's the same kind of idea in construction in China. China in the last 10 years has used more concrete than the United States has in the history of concrete. Okay. They just build. They just
build fake cities.
They build and build. And they build cities. They build all kinds of different.
They literally build cities that nobody lives in.
That's right. I mean,
if you build it, they will come.
Well, probably. They watch the Field of Dreams. I can tell you that. President Xi.
Pound dollar cross pair real quick, Matt. It is breaking out for my Forex traders out there. I know that we're talking about Brexit and all the kind of things here. Cody, I saw some prep notes on this with the Brexit from Theresa May, some news there. What's going on with Brexit right now? What was in the news on this? Because this is running.
She refused to let there be a no Brexit deal. She's basically saying, I'm going to make sure something happens. We're going to come to an agreement in some form or fashion.
Yeah.
And she's standing. Yeah, she's standing hard and saying, like, we're not just going to let this thing go dead in the water with no deal. So she's taking a hard stance.
Man, I can't imagine why the pound would strengthen on Theresa May's comments when she hasn't proven to be able to get anything done. I mean, literally for years now. It's breaking out here technically, but now you've got other resistance points in play.
The pound is a schizophrenic trading instrument right now that nobody should really touch.
It's going nuts right here.
I get it. I see the breakout. Be my guest. I just don't trust Theresa May. So I saw the headline. I read the news, and she's taken her hard stance after some positive situations that have been transpiring over the last couple weeks. I don't know if have you ever believed there was going to be a hard Brexit though?
They're going to figure out a way to get some kind of negotiated contractual deal done, and they're going to get out of the EU and they're going to move on. I mean,
I'm not 100% there that they're actually going to leave the EU.
Yeah, I know that we've talked about
that. I'm not 100% there.
Yeah.
I might be 90% that they're going to leave the EU on a negotiated Brexit deal. 90% there. Mm-hmm. But there's still something in the back of my mind that thinks Theresa May doesn't actually want to leave the EU.
Mm-hmm.
And she's trying to buy time.
Yeah. Yeah. Very possible. Very possible. There's no doubt about it.
That is pure speculation on my part, by the way.
Right. Well, Coach Keith has said this many times. He says, hey, I guess you got to hold your breath and buy. I don't think I could even do that, Coach Keith.
Not on the pound, Keith.
Not on the pound dollar cross pair. I know what the chart is showing me. I just do not see it myself. A couple of companies I want to rapid fire through here, Matt. Home Depot, we talked about. GE, we have not. They're down 2.4% after, that liquidation. We talked about a gap fill here. We knew it was going to do it.
Yeah.
Mandatory GE reference, I guess.
Mandatory GE reference. They had their day in the sun. Well, let me rephrase. They had their 5 minutes in the sun.
When you have to liquidate a division of your company just to be able to offset some debt obligation,
a profitable area of your company as well.
It's a trash company.
It's trash. Don't touch it.
A lot of the brokers and a lot of the financial institutions are looking interesting to me here, Matt. American Express and Visa, they were on the options report this past week. As you look at this, kind of holding that 20, Visa actually to me looks better than AXP even. And I'm looking at this part of the market and they're showing me some strength here.
Yeah. And I don't get all excited on that chart. I mean, buy and hold, I guess. I don't get excited on a trade there though.
And Square, which is one that we have on many of our lists, Tackle 25 type list and whatnot, they've got earnings coming up. So be aware of that. But really what I want to do, Matt, and what we were going to do today in our Delta
one last thing, Tim. Mm-hmm. We talked about Powell going on the hill today. Also on the hill today is Big Pharma. And Big Pharma is on the hill to discuss rising drug prices and how we can lower those rising drug prices. And if you remember one time in 2016, this is what it is to be a veteran trader. You remember one time Hillary Clinton gave a speech where she said she was going to regulate the pharmaceutical companies. And what happened to every pharmaceutical company over the next month?
Mm-hmm.
They all got slaughtered. So keep an eye, and we don't know what's going to happen yet, but do keep an eye on Big Pharma on the Hill if you're a trader or investor in pharmaceutical companies.
On that, there aren't many bipartisan issues these days.
That's one of them.
Big Pharma is one of them.
That's one of them.
They can, if they put forth a bill to bring those prices down, well, you'll see people on both sides agree.
Let's ask hashtag Team Tackle here. Team Tackle, would you support regulations on Big Pharma from being able to raise drug prices as much as they have? I'm willing to bet it's 80-20 yes to no. I mean, some people will say no just because they're anti all regulations, but I think it's pretty much a bipartisan, issue. Yeah. It's something I support. I would gladly support regulations on biotech companies.
It's one of the leading factors into increasing healthcare costs, and healthcare has taken over a bigger share of GDP in the last 40 years, over and over and over again. It's in an uptrend for a reason, Matt. Yeah. Rising cost from these companies that are innovating. So do you regulate the innovation? Yeah, I mean, it really is a debate. I don't think it's an easy answer.
I don't think it's a debate. I think you got to figure out how to regulate them, and you regulate them. Drug prices are rising way too much, but apparently it's not impacting the CPI report.
Yeah, maybe that's not factored into it. One of the things that we're going to do today, Matt, is we're going to prep, a delta-based trade on a couple of different companies, and you can pick one or the other. There are two different setups that I think are interesting. EA is a more complex setup, in my opinion. Facebook might be a volatile setup. Yeah,
it's a volatile setup. So you got an EA here. EA. Nice little retracement coming into a rising 20-day moving average. Love the slowing momentum of this. We talked about it yesterday. We needed an upward movement in price to close above. And the question I had yesterday was, the only question is, what level do you want to get in above, right? Do you want to get in above the previous high of yesterday? Then by all means, it's doing it right now. I think that'd be a little aggressive. Mm-hmm. I think EA has a very clean trigger now that we kind of see what's happening today. And that's why it's always important to wait for confirmation so that you can see kind of where the market, finds the importance of certain levels on that intraday chart. And now, as you can see, let's drop this down into the intraday perspective here. As you can see, big upward movement in price on the cash open, and then it gets above 99, ticks all the way up to about 99.63, right in that zone of that $100. Now, there's two ways to get into this. You have one aggressive, and then you have one more conservative. The conservative approach at this point would be to say, okay, I like the trend on EA, I like the pattern on EA, but I don't want to get in unless I get a close above 100. Give me that close above 100, or just give me an order above 100. Say 10% of the ATR above $100. 10% of the ATR would be, this stock flies. It's moving 6.5% a day. But the 10% of the ATR would be about 65 cents above 100. Get that order in about, 165 type thing. Wait for that confirmation to get back up above 100. Now you could go out and buy it at 97 right now. And that would not be a bad trade. And I'll explain that one here in just one second. But the reality, Tim, is if you buy it right now, what you're in essence doing is you're buying a day trader's type technical formation. Mm-hmm. So when you're looking at this from an intraday perspective, you see the cash open happen, then the retracement happens, coming back down into a previous old resistance level. So you actually have a good trade right there, and there's nothing wrong with that. You just don't have good probability. So you have a really good reward to risk ratio, but you only have like 50% probability on this to be actually successful. Now, you might say, well, Matt, if you're saying it's 50-50, how in the world can you justify that trade? Well, easily, if I buy it right now at 97 and I'm targeting 109 by, say, 111, I got a $12 potential return. And if I put a stop loss, say, underneath this old resistance level here, where the tick is down here at 92, I can put a stop loss underneath 93, say at 92 and a half. I take on myself, what would that be? 92 and a half to 97 would be about 4.5. I got $4.5 potential risk for a potential, $12 on the gain. So yeah, I mean, if you got a 50-50 coin flip type situation, but you got a $12 potential return versus a $4 potential risk, that's a 3-to-1 reward to risk ratio. You make that trade 100 times, you're going to make money. I mean, it's just simple math right there. So that's an aggressive trade though. And that would not be something I would consider if I were new to the marketplace, by saying, okay, I like to trade on a daily chart, but let me break it down into an intraday to actually find where that trigger is going to be. The more conservative trade would be that first trade, wait for it to set up, wait for it to get back above $100, and then you have that target at the 109 to 111 barrier. 109 is the previous pivot point right here. 111 is the 200-day moving average right there. The stop loss placement on that trade, though, would have to be different. You could not get a stop loss all the way down underneath $93, just given the fact that now you don't have a good reward to risk ratio. So what you would have to do is you'd have to use a different type of stop loss, say a 1.1 times the ATR underneath your entry, or a 10% of the ATR below the low to justify that type of trade. But Tim, you know what I'm going to do? I'm going to go into a lot of detail on this tomorrow night. Yeah, but that's how you'd approach this trade.
Yeah. What about Facebook? If you're looking at both scenarios, I mean, just kind of from a high level, big picture, EA is on a kiss hello pattern. We know the news and the volatility has been a little bit higher on a beta perspective, percentage wise. But Facebook, you're sitting on the 200 MA. You've got a little bit of a backfill here that now confirmed yesterday, which, like, if you're looking at both of them and you're a trader out there, how would you start to evaluate the differences?
Well, number one, they're similar, right? They're similar. I mean, we're talking a bullish retracement versus a bullish retracement. The only difference is Facebook is already confirmed, so that you would just have to update your trigger on Facebook. Facebook confirmed yesterday. I mean, you got to call that confirmation coming off the 20-day moving average. It closed above the previous day's high. It closed above the previous week's high. That's confirmation on a retracement. So you already have confirmation on Facebook. You do not have confirmation on EA yet because we haven't seen the close. So you just simply have to update your trigger. Easy trigger on Facebook. 10% of the ATR above right there. 166.40.
Some interesting companies with earnings as we rapid fire through the end of the show here today, Matt. Tomorrow, Best Buy, BBY, if you'll take a look at it, one of the big box retailers. We saw Home Depot miss. Could that be foreshadowing for Best Buy? We'll see tomorrow when they come out. This has been one we trade quite often. Pre-earnings, obviously, here, you're going to either play a volatility play or avoid it. You also have Booking.com, BKNG, one of the biggest stocks in the market by price, but not is exactly liquid here. Also, another consumer type company. If consumer confidence is as high as it is, maybe bookings have been up.
Can I ask you a question?
Mm-hmm.
We used to trade Priceline a ton.
A lot.
A ton. Credit spreads all the time, right?
Mm-hmm.
I mean, a ton. Ever since they changed the PKNG, do you trade it as much?
Not as much.
Not as much.
I don't know why.
Habits. We're creatures of habits. I'm sure. And
right.
Every time I try to go type in PCLN, it'd be like,
where's Priceline?
Where's Priceline? What's going on? Why are we changing your symbol? Why are you making it hard on us traders? But it still is a good credit stock. There's no doubt.
Yeah. All right, brother. We're going to do a Type 45 here today. Any last thoughts here for the team out there? Hashtag
coach's show later tonight. Tales of a Technician drop today. Podcast, Trading Justice Podcast. Let's go ahead and go over to the website very quickly, ladies and gentlemen. Trading Justice Podcast. Episode 310 right there. Definitely go ahead and download that on any app, really. iTunes, any app out there, Stitcher, what's the Spotify, and then like Mark says, he doesn't understand all those app type things. So he just comes to the Trading Justice Trading Justice website here. You can get that. You can also sign up for our newsletter. We're having a new newsletter drop later this, I believe early next week is in our next newsletters dropping. Mm-hmm. And then obviously you can get access to all of our old podcasts and all of our old newsletters and so on and so forth. And I hope you guys enjoyed episode 309, Shooting the Bull Wolf of Wall Street as well. So, and if you guys love that podcast, guys, we would love a nice little 5-star review over there on iTunes. Help us promote that thing as well. Hashtag Team Tackle. You guys are amazing. Love you guys. We'll see you in the Coaches Show, and I'll personally see you guys tomorrow during the halftime report.
Peace.
Are we out?
I don't know. Cody walked away, so we're probably still chatting.
We're probably still live.
Yeah, I think
probably still live.
Young Cody.
Cody's like, they're never done on time, like literally, ever. So we're waiting for Cody. There's Cody right there.
What happened?
We were just talking, waiting for you to show back up and do your job so we can get off YouTube.
Oh, well, I guess goodbye to everyone then.
Yeah.